Okay, good morning, everybody. Let's go ahead and get started. Let me know if you guys can hear my audio and see my screen in the chat box. Just give me a little Y or a yes there. Hope everybody's having a fantastic morning. I'm excited. I'm looking forward to trading today. Looking forward to making some money. We had a good day yesterday with the banker's close and a couple of other trades, and looking forward to doing the same thing again. So let's get into it. Before we get into trading and any other market instruction, I need to go over the disclaimer. As always, just need to remind you guys about the risks involved in this market. You can lose all or more than your initial investment if you're not careful. So please be aware of how many pips you're risking on each trade, in addition to how big your lot size is and ultimately how that would affect your account if you were to lose money. Okay, awesome, guys. So let's first things first, right? Go through the process. Let's look at the news. Let's take a look. What kind of news do we have coming up here? Um, we have so today there's actually not a lot. There's a little bit of Aussie news this afternoon. We had that Aussie rate statement yesterday, just came out as expected. And then tomorrow we have the CAD rate statement. So we'll see how that one goes. Everyone's still raising their rates still pretty much, but as long as they do to the expectation, we shouldn't see anything crazy. But yeah, we should have the clear to go with pretty much any pair that we choose to trade this morning for the banker's close. So let's take a look and find out, does anybody have a setup right now? So I'm going to zoom in. Again, you're looking at a 5-minute chart on either the euro franc, the pound franc, or the euro pound. And really any currency that's related to the Europe or the London close. This one appears to be doing it. Let me just see what the pound franc is doing, and then we may execute a trade here. I'm not sure if there was any news that I missed. Let's see. Sometimes if you don't see the news lined up here, it'll be in the top stories or news/latest stories, which I don't see anything. So I I believe that this nice candlestick up or big candlestick down has more to do. Okay, so anyway, I gotta stop talking. I gotta get into this. I'm gonna just do this. Actually, I do like the euro pound a little bit better than the pound franc, so I'm gonna go ahead and buy the euro pound here. I'm just gonna do my starter position. This thing kind of fell off a cliff just recently. It's kind of interesting. So anyway, I've just got in my starter position, and then 1 second, I gotta take this on my other account. 1 second, I got 2 accounts I'm managing here. I gotta pull up the euro pound. So I gotta change my lot size. Just grab a couple of trades. Okay, perfect. So yeah, I got a starter position in here. And let's draw out our levels because that's going to be huge, right? Like that's kind of you need to find out where liquidity is, right? So um, this goes back like 3 or 4 days of trading, and we are pretty much at a liquidity zone. Um, like I would say that this whole thing right here is an order block right here. And the reason why that's an order block is because it's the last thing, whatever this was right here, was the last thing that caused the market to break out of its structure. And we're pretty much sitting in it right now. So it's kind of unique that we're actually at one of those levels right now. Normally, you're not going to get that lucky. I think I said yesterday in our instruction um, that when you're trading this type of strategy, you have to learn how to utilize limit orders and pending orders because most of the time the market's not going to be at these prices that are so awesome. And this is a great price based off of this order block. Let's identify a few others. So like if you go back here, what are some other things that caused a breakout? Technically that whatever this was caused a breakout. So this would be the next layer where you'd want to be pretty interested in buying is if the market came into this. And it looks like we're breaking down right now. So we might get an opportunity to buy inside there, which that would be awesome. I'm just going to snag an order or two. And then let's see what else we need to do. Okay, so I need to move. Let me go on to a higher time frame as well, just to make sure that we've got all the different major blocks drawn out here. Um, Generally speaking, this euro pound has been falling recently, but it has come into a pretty good demand zone. We'll on a higher time frame, I'll show you what that looks like. I've been watching this pair quite a bit. That's why the euro pound isn't pushing down as hard as it used to. In fact, one analysis you can do is this, where you're just measuring um, each low. So this low is lower than this low is lower than this low. Same thing here, but the thing that you're identifying is it's taking longer to make those lows than it did before. Okay, that's key. It's taking longer, and it's also they're not as drastic lows. Like they're not pushing lower to such a large extent like they used to be, if that makes sense. So that's kind of the concept that we're also identifying. So for example, let me actually go to TradingView to illustrate this better. So yeah, if I pull up, sorry, I got a lot of stuff on my chart. Let me get rid of a lot of this stuff. Okay. So if you go to the euro pound and you pull up an hourly time frame, um, and you come back over here, you can find where some of these order blocks are. So like this is an order block right here. I would also argue that there's some down here too that we may need to consider. But for now, I'm just going to draw this one out. And so if this market wants to come down, it's going to have to find some, it's going to find some help right there, right? And it looks like it did, like it came right to it and then bounced right off of it. And we'll see if it comes back down to retest. I think that's very possible to have a retest of that. Let's go back to the smaller time frame. Let's do a 15-minute, or no, five will do fine. Let's go to the 5. Okay. So what we want to do is identify spots today. I don't know if it'd go all the way down to there. That's kind of a long ways, but if it did, that's fine. That's a higher time frame order block, and that's from the current price. That's 30 pips away, which I think is a lot to kind of ask in the banker's close, but it's not. It could happen, but I don't know if it would. Okay, and then some other major areas that to draw out. We already drew some of these out earlier. This is an order block right here. Absolutely, 100%. That's one right there. And look, the market came right into it already, and then bounced off of it just recently. That happened while we were here. And then you also have this area right here we talked about, and it looks like the market paused there and then kept going down, and that's fine. Sometimes that happens, but I do believe we have several different blocks to work with here where we're likely to get some help from the big banks. So now that we've got some of those kind of drawn out, I think we'll be good to move forward. I do want to just kind of keep my stops outside of that low right there because I'm working with whatever order blocks are in here on the 5-minute. Yeah, here it is. Yeah, so this is kind of what I'm looking to work with. And then, like I said, there's a pretty significant this one right here. Okay. Something to be aware of. This one we do need to be a little bit more quick at taking profits, though. It's not necessarily a bad trade. It's just not the most bullish trade I've ever seen. One thing I just observed is, as we're making these highs here, this high is lower than the previous high. right? And we are starting to make lows that are lower than the previous low. So we are starting that downtrending concept. So when we hit the mid Bollinger Band on this one, we do want to exit out of our positions. Like we don't want to tango with this market longer than the required amount, if that makes sense. Like yesterday with the euro pound, it was kind of nice because we were creating higher highs and higher lows. And so buying the euro pound the other night was like perfect. Um, in fact, I think it almost looks like we should have stayed in the trade. I think we bought, oh, no, we bought, let's see if this is this right now. Let me draw a line. This is today. So 4 p.m. yesterday would have been, yeah, like right. Okay, so this is what we bought yesterday. We bought the euro franc in this dip right here, and then we just got out, when it pulled up like that. Um, and that one I feel like we could have probably stayed in a little longer, more so than this one that we're in today on the euro pound. So just making that clear, that we are making some. There are some initial signs that this thing wants to turn over and go down. But that doesn't necessarily, like, I want to make it clear that even though that's probably what will happen over the next couple of days, it doesn't necessarily mean that you can't take a banker's close like this. That you can totally take a banker's close and buy and then get out for a scalp and just be like, okay, yeah, I know that the overall bias is down. That's good to remember. But for now, I'm going to go ahead and make some money on the other side of this, right? There's nothing wrong with that type of a trade. Okay, so we've got that set up. We'll let it do its thing. I'll probably, inside of this order block down here, add a few more trades if it wants to come and revisit this block right here. And then we can work with what the market gives us on that. But other than that, we want to let this go. We should probably place our targets. Um, so I'm thinking, yeah, if the market kind of comes up into here, um, we want to get out of our trade, right? We're not going to wait for the market to make a new high because it most likely won't, based off of what I'm observing. But that doesn't mean it's not going to go up. Of course it can go up. Markets go up in downtrends, markets go down in uptrends, right? It's just one of those things where okay, we're observing, we're making lower highs, we're starting to make some lower lows in this banker's close hour. Okay, so it's not going to be more of a continuation to the upside. It's going to be a quick little move to the upside, take our money and get out type of thing. That's all we're doing. Okay, so I'm going to let that sit there for a second, let it do its thing. Let's see if there's anything else we need to really discuss. Um, I have some trades from last night that are rolling. Let me pull this over here for you guys to take a look at. My Aussie dollar trade is down $400. That's about the same where it was last night, but my euro dollar trade is up just over $400. So it's kind of like, okay, they're kind of a draw right now. Um, let's take a look at each one. Let's actually go to here. I'm going to keep an eye on this. I'm going to pull this over here so I can keep an eye on our banker's close trade because yeah, if it does pop up, we want to take some profits. But yeah, in the meantime, let's jump over here to the Aussie dollar. And this is starting to go up here, it appears. It got pretty close to a stopping out, I think. I can't remember where my stop was on this. I think it was below this, but it basically last night came to a liquidity zone right here. This is better viewed on like a 15-minute. Would be a liquidity zone. And then it didn't breach the low and went back up. So there may be some push to the upside on this. Oh, why did I take this trade? So I basically re-entered the trade I lost on the other day. The reason why I feel good about this is because, yeah, if you pull up the like an hourly chart or maybe like a 2-hour time frame, we've had a lot of like buy order blocks down here pushing this up, and most of the liquidity is up here, like up in this area. And you can see there's several sell blocks right here. And I believe the market wants to return to those blocks. That's kind of what I'm viewing. So anyway, that's kind of my expectation, is that this would continue higher to kind of tap into this supply. Because right now it's just basically in demand zones. There's only demand down here. And so that's why I feel like, okay, this thing might continue higher. We'll see what happens, but that's kind of been my expectation with the Aussie dollar. But yeah, you can look at multiple time frames. Like here's a 3-hour, only buy blocks down here, no sell blocks anywhere, not even here. So all the supply is up here and even beyond, right? But that's where the supply is. So why would the market stop now? Why would it stop its uptrend now if all the supply is up here? Like that I hope that makes sense, kind of what I'm saying. Because it takes supply to cause the market to go down. There's no supply, right? So we're only in demand areas. So, and of course there's little moves down. Like we had this move down yesterday, we had a move down the other couple days ago, but mostly it's been up. That's fine. Market does that, it fluctuates. But yeah, in terms of supply demand, we have mostly demand zones down here, and most recently, and we have a few supply zones that were created recently, like a couple, but not like a big deal. But most of the supply that I believe the market wants to go into is up here, wants to tap into this. And so that's why I'm taking a swing trade to, ride this guy up to here, or wherever I have it. Okay. So, all right. So that's the Aussie dollar. Euro dollar, I entered into a long position yesterday afternoon. Now it's now positive, which is great. And this was a similar thing. Yeah, like here's an hourly time frame. Recently I had another buy block show up, several down here, several demand blocks. I guess there is one sell block up here, but yeah, if you pull up the higher time frames, I guess there's several right there. I didn't notice that. Well, maybe I should get out and take my money, but I guess on a 4-hour time frame, the 4-hour, I guess the much higher time frame, the supply is up here. Most of the supply is up here, and it's already chosen to go up. And so I believe that the market would want to stop up here. I just wasn't aware. I might have to do a second look at this. It looks like the 2-hour has a lot of supply right here. But let me go and look at what's causing that. I guess it's this that's causing that. If we can bust above this though, there's no stopping this thing until it gets up into here. There's nothing that would stop it between here and here. Nothing. So if we can break above this area, then yeah, we've got another 100 pips to go to the upside on the euro dollar. But I think I need to do some more research into it, because it does look like there's actually some supply in the nearby. Take a look at a smaller time frame. Here's a 15-minute. It's somewhat correlated to the Aussie dollar, and I don't know if I want to be in both at the same time. That's interesting, because when I was looking at this the other day, I don't think I remember seeing any supply blocks up here. So that kind of changes the narrative for me on this trade. So, and the fact that I am positive, I think I might just take my money. The only thing that is comforting is the fact that the 4 hour has no sell blocks anywhere nearby except up here. So with that in mind, okay, now it makes sense. The euro dollar might go up 100 plus pips with that narrative in mind. Um, but yeah, on the smaller time frames, it looks like there's several nearby. What I really like is when the smaller time frames either don't have any supply nearby or demand, and then the 4 hour or the higher time frames just show that, like, hey, look, it's all the way out here. That's why it's not showing up on the smaller time frames. So anyway, something to think about. But the fact that I'm already invested into the Aussie dollar long, which is a somewhat correlated trade to some extent, I don't know if I want to stay in it. So I am going to take that money off the table, the euro dollars. So I'm just going to take my 325 bucks. Not a huge trade, but yeah, I am going to take a little bit of profit on that. And then the only trades I have are these pending orders, which we can talk about, um, that haven't triggered yet. Um, and then I took some trades on the euro pound that we're waiting on the banker's close. And then I have this trade from the Aussie dollar that is down right now, but we're waiting on that trade. So, but yeah, here's the Aussie dollar again. Look at the 5-minute chart. This is where it's at. Like I said, it came into a demand zone down here, popped up. And with this one, I think I remember, yeah, like with this guy, on pretty much all the time frames we looked at, tons of demand right here and tons right here. So even if this thing went down, I believe that it's close to finding a bottom. Like it is close to, um, because there's so much demand down here. Like in the next, if it were to come down, let's say right now, there's more demand in 20 pips, and then 70 pips away, there's a truckload of demand down here. So if this trade went against you 70 pips, in my opinion, like hang on, maybe even add to the trade because there's a lot of people willing to help you out down here. Whereas in terms of the sell, I was kind of surprised it actually sold off right here, to be honest. I think it had something to do with the rate statement that came out but yesterday. And then the market just realized it was kind of a nothing burger and just kind of resumed back into its uptrend, which has just barely started. Um, but again, hourly time frame, where's the supply? Up here. That's where supply is. Go to the 2 hour time frame. Where's supply? Up here, right? That's where the true supply is. It's all the way, it's like it's very far away. Like this is 300 pips away. Like this could be a monster trade, guys. It really could be. Again, 3 hour time frame looks even better. The higher the time frame you go up, it just looks even better. Um, all the way up here, yeah, like I said, 300 pips away. That's where the next supply zone is. You go to a 4 hour time frame, same thing. A lot of supply up here. I guess there is a little bit right here, but that's still 150 pips away, right? And then you've got one that's up here that again, that's 300 pips away. So that seems to be across all the time frames I've looked at, the 2 to 300 pip area is where most of the supply is. So that's why I really think that this thing has more to go. Probably will continue that direction, but we will see, right? We will see. Okay. And we can spend more time looking for more opportunities. It looks like our trade is I'm almost a break even on this. I'm down just 2 pips or a pip right now on this. We got a couple of trades that are now very positive on the euro pound. But again, I'm going to let this thing just go a little bit longer, let it do its thing. Let's see, how am I doing over here? Yeah, same thing. I got a couple of trades that are pretty positive, and these guys that just need to turn around a little bit. Awesome. All right. So last night I took several trades outside of, like, I took several trades on my own. Let's see. Let me show you some trades that I'm in that are pending. I have trades on the dollar yen. This is a very shorted currency pair right now. Um, I was pretty excited about a lot of these. They just haven't triggered yet. So here is the dollar yen. This is a very significant supply zone right here between this one and this one up here. And it hasn't been, it got really close to it, but it hasn't actually triggered yet. You can see it got really close. But why is this a significant area? Let's talk about the science behind this. So basically, whenever you see a big move down or a big move up, your eyes should immediately go be directed to it, right? You should be thinking like, oh my gosh, what caused that? Like, what is going on here? And so you go directly to the thing that caused it. So the other thing too is you want to find the consolidations, the mechanisms that cause break of structure, okay? Um, break of structure is everything. It really is. Like, I'll say that again. Break of structure is everything. And it's also just known, it's just known as price action trading. So like when you have the market, right here we have a support level. This is support. This is also support right here. This is a structure zone. And the market comes and retests support right here, bounces off, forms a consolidation, and then just falls apart, right? Support and resistance are meant to be broken. I'm just going to say that, right? Support and resistance is meant to be broken. So obviously we had support and resistance break right here, okay? And just went forever down, right? Whenever you see the market break support or resistance, which is also known as structure, you want to go back and find what caused it. Well, it's whatever this thing is. So this is now a supply zone. So if the market ever came up here and tapped into this, there's a very high chance the probability of the market coming up here and then pulling back is really awesome. The other cool thing that you get out of this, guys, not only is a good trade, but very high reward to risk ratio opportunities with extreme accuracy. Like for example, like a lot of people look at this, and I used to look at this and I'd say, wow, how can you put a sell right there and put a stop loss? Um, oops. How can you put a sell right there and put a stop loss right there and get away with it? That stop loss is too tight, especially if you're looking to go all the way down here. People look at this and they say, wow, how in the world would you get away with that? No, you totally can. It happens all the time. You guys have seen it. Um, it doesn't, like, you have to allow the market to trigger you into the trade. Like, it can be some work trying to get your trade to actually trigger. Um, but once it does trigger and you get several of these to go, sure, you're going to lose some. Like, I had one that lost last night, lost a very small amount. It was like a $200 or $300 loss. But when I win on those types of trades, you're winning two, three, four, $5,000. Like, it's an insane amount of money. So like, I will definitely pay that $200 or $300 loss every single time, especially when most of the time you're going to win these anyway. Like, it has a way higher than a 50% win rate. But win rate is, honestly, I don't even care about win rate as much. I do care about it, but it's not like that's the most important risk management metric. I personally think reward to risk ratio is the most important. And I've been trading for 10 years and I've seen it both ways. I've traded strategies that have gone both ways. Um, our brains want win rate. Like, we naturally just want to have a win rate. That's awesome. Okay. Why do we want a win rate? Because if we have more wins than losers, then we feel like a winner, right? Like, we feel like we're doing great. Um, I would argue that our brains want to be right more often than we want to be profitable, which is a problem. Isn't that crazy? Like, we want to be winners more often than profitability. And so we're kind of working against our own like psychology there, but we just have to work with it. We have to learn how to be disciplined. Um, anyway, so um, because losing money is painful. Like, even if it's a small amount, it's still painful, right? So like, if you lose, let's say we have a bad streak with these types of trades, these supply demand zone trades, and you lose like 4 trades in a row, but you have one winner that's at 5-1 or 6-1, it covered all the losses on the previous trade, and gave you profits. Sure, you get a huge reward from that win, but sometimes I feel like that one big reward does not compensate in terms of our mind. Like our mind is still at pain for those 4 losses, even though we just recovered it all, right? Whereas like I've traded straight. One second, guys, our trade is rolling here. Okay, so it's starting to push up. I'm gonna just lighten up some of the trades that are not priced as well and leave some of the other trades to run. That's it. I'm gonna leave that, and then let me do the same thing on my other account. Okay. Okay, that looks good. Perfect. And yeah, we'll let these ride, hopefully to up to some of those target areas. I just wanted to lighten the position just slightly. But that's awesome. We're profitable on that. We'll let that continue to do its thing. Um, isn't that so cool, guys? It tapped into this supply zone. I mean, it blew through this one. Total disrespect for this zone right here. And I know why it did that too, generally speaking. So let's look at a chart where it's not messy. Go to the euro dollar. We'll come back to this one. This is the dollar yen. I'm showing you this trade. And I had that thought. I need to finish what I was saying about that psychology thought real quick. But as this is fresh, let's talk about this. So we have 2 supply demand zones here on a 5-minute chart, 15-minute chart, actually. It could be drawn either 5-minute or 15-minute, but they're still the same thing, right? So we have 2 zones. Why did we draw these zones? Again, break of structure, right? Like break of structure. That is huge. I like remember that, like write it down or something. But whatever causes the thing that causes the market to break out of support, the thing that causes the market to break out of resistance, pay attention to that thing. Okay, because that's where the big reward to risk ratio trades and the greatest trades of all time exist. I'm not even joking. Like, don't trust me, follow anybody else that knows what they're doing. They're doing the same thing. Okay, so like you're looking at this here and you say, okay, hey, this is some structure level, right? Like we have some resistance. Obviously it was resistance here, here, here. It has multiple points. That's resistance, right? What caused it to break? Well, pretty much whatever the market was doing in this area. That's a supply, that's a demand zone, excuse me. That's an old supply, new demand zone. Okay. Look what the market did when it was here. The first time, here's what I was going to say. The first time the market taps into supply or demand, that's when the best trade is available. So obviously it tapped into it. It came down from this high up here and it tapped into it right here. And then what happened the moment it tapped into it? It was down for less than 30 minutes. And then boom, 34 pips. What's the reward to risk ratio on this, guys? Like, I'm not like, this is like, look at this. I mean, I'm not saying you'd capture that whole thing, but that's 3.22 to 1. Let's just say you do the normal 2.5 to 1 or 2 to 1, even right there. 2 to 1's right there. 2.5 to 1 is right there. 3 to 1 puts you right there. And there's a little bit more to go, right? You wouldn't have been able to get 4 to 1 on that one, or 5 to 1 or 6 to 1, but still, I don't think any one of us would be mad at the market if it only gave us 2 to 1 or 3 to 1. I think that's great. I think we just need to stay away from a lot of the 1-to-1 trades, right? Like 1-to-1's not necessarily a bad thing, but I feel like you spin your wheels a lot. Like you have a loser and it's like, oh dang, well that eats away an entire winner if I lose. Whereas if you only accept 2 to 1 and 3 to 1 and up, the cool thing about those types of trades is, yeah, if you hit a loser, it's like you could make all that back on the next winner and a lot, right? So anyway, so what I was saying here on this thought right here is basically This is a supply area, and we know why, because this is what caused a break of structure. This is the structure. It broke out. Why? Because of whatever happened here. This is a demand zone. Market tapped into it and then went up. Why did it not go up again after it tapped into here? Because the more a demand zone gets tapped into, or a supply zone, it gets diluted. It doesn't work as well. So you want to be the first to tap into it, which we were on this one. Isn't that cool? Like, we actually tapped into this one. So here's another break of structure. This is another resistance level right here. You can see it was respected here, and then the market broke out of it. What caused the market to break out of it? Whatever they did right here. Whatever they did here, whatever happened here is what caused this break of this structure right here. There's multiple structure levels, right? Broke that resistance. Okay. Market comes in, taps into it, boom, it's gone. Right. And we were the first to tap into that on this banker's close trade, right? So I think that's one of the reasons why it worked out so well, is because we were some of the first people to tap into it, right? Let's see, what else was I going to say about this trade? Okay, so that's the thought I had, obviously, and then we're just waiting for the rest of the trades to mature and do their thing. What else? What else? Okay, so yeah, we'll let those do their thing. And then I was talking about this dollar yen trade, and let's go back to it. But yeah, I kind of finished my thought on the psychology thing. Just basically, um, oh, basically, I was just saying it's very hard for us humans to accept high reward to risk ratios when it comes at the cost of maybe having some more frequent losers. So I've been on the opposite end of this. Like, I've traded strategy for years. I was trading strategies that would have these very high um, risk in terms of the total loss could be very high, but the chances of you losing that day were very little. So like, I would take trades where, I'd have a 2 or 3 pip take profit, and I'd have a big lot size on that 2 or 3 pips, and I'd make a lot of money on just 2 or 3 pips. And I'd win almost all the time, right? When you have only 2 pips as your target or 3 pips as your target, and a 100 pip stop loss, 200 pip stop loss, yeah, naturally anybody could win most of the time. The problem is, and you guys know this, every once in a while, and it's actually not that once in a while, it happens somewhat often, you're going to get that trade that doesn't hit its target on that 2 or 3 pips, and it's going to go to its 100 pip stop loss. Doesn't happen all the time, but on occasion it does. And it happens enough that when it does hit your stop loss, you lose everything you had made on all the previous trades. Wiped out, totally wiped out, right? And so anyway, so that's why, but I'd always go back to it because I'd have a bad, so like, let's say today I lost that money, I lose today. I'm going to have a bad day, whatever. And then, maybe I don't trade again tomorrow, but then by the third day, I get the trading niche again and I go back to it. I go back and say, I want to trade again. But the problem is I would just go back to the same thing that was causing me to lose money. I was just going back to, adding to really bad trades, not having a stop loss set. Or if I do, it's like this huge 100 pip stop loss with only 3 pips of reward, I'd go back to it. And then that's when I changed my mindset on a lot of this kind of stuff. So now I'm looking for stuff like this where I can get 2 to 1 minimum. That is an absolute minimum, guys. Just putting that out there. I will not take a trade unless I can get at least 2 to 1, at least, right? 3 to 1, obviously preferable, but like, I mean, there are trades we've been able to take that are 6 to 1, 7 to 1, 8 to 1, and they are out there. I used to think people were lying. I used to think like when people say, yeah, you can get an 8-to-1 trade, I was like, psh, yeah, at what cost? How many losers did you have to have? Well, if you're trading supply and demand zones, you can actually hit those pretty often. You can actually hit those. Anyway, so this is one right here. I have a trade sitting right there. I posted it last night. I have a trade sitting right there, ready to sell if this market wants to come up and tap into that. I also have a trade right here. If the market wants to tap into this one right there, that's the last known area of structure before the market just broke out. So yeah, either one of these would be a great place to sell. But other than that, I'm not willing to sell anywhere in between because if I sold right now, I don't know if I could get that 8-to-1, 3-to-1, whatever to one reward to risk ratio. I just couldn't get it right now. But if it came into these areas, yeah, I can demand that from the market. Yeah, absolutely. All right, guys. So some other trades. I mean, let's take a look. Actually, I have a trade on the Kiwi dollar. That's just sitting right now. Where's this one? Let me take a look on this account. Oh, it's down here. Yeah, so I really like this one. There's actually, oh man, there's some really good spots here. This would have been a good one. I didn't capture this one though. This is a really nice demand area. The only thing is, did it break structure though? Not really. It's just an area where the market came and stopped and then went up. So for me, these are kind of supply demand zones, but not in the traditional sense. Why? Because they don't have a break of structure, right? So you can just delete these ones. Even though it looks like the market did well, it came close to this and then went up. The real one, and you guys can see where this is right here. Why do I like this one so much? Why is this area so cool? Break of structure, right? Look at this. This thing comes up 1, 2, 3 times, basically just comes up against it and just gets sent right back down. But then one thing happened later. It finally broke. What caused it? This very obvious one right here. Very obvious. Whatever the market did right here, whoever came in and bought this right here had to do with this huge move to the upside. And not only that, but it's the thing that caused this break of this nice resistance. This beautiful resistance was destroyed by whatever this thing is. So if the market ever comes back down, which it might, where do we want to buy? Oh, 100% inside that purple box. You do not want to miss a trade like that. You do not want to miss that. Look at this. Stop losses goes right there on the other side of the mechanism. And guys, just 2-to-1 is right there. Don't tell me that the market won't go to that, especially after hitting such a major supply zone or demand zone, excuse me. 3-to-1 is right there. I'd say that's very doable. Heck, some of these have gone all the way up to and made new resistance levels, and that's 8-to-1 right there. Will it do that? I don't know. That you're asking a lot, but is it possible? Yeah, definitely. Definitely. So, but yeah, so I have another trade sitting right there. Has it triggered yet? No, like I'm just waiting for the market to do its thing. And that's the thing. A lot of the times, guys, with these types of trades, you really do just have to you just have to sit and wait. You just have to sit and wait for the market to come into here. Obviously, you're not buying at support. This is support. The blue line, you're not buying there. You're buying in the demand zone, which is right here. That's where you're going to buy. And again, we just haven't tapped into that. We have to wait for the market to come down. So I would be kind of nervous. I'd be kind of nervous to buy really anywhere in between. Again, you could argue that this is kind of like a demand area as well. And obviously it looked like it has done okay. Like, yeah, you could definitely say so. But did that really break structure the last time it was there? No, it didn't really. So sure, it kind of worked out. But the stuff that's really going to work out where you're going to make most of the money is if you can get into stuff like this. Well, but it's not there right now, so I have to wait. So I have to wait. Anyway, I've said that multiple times, but that's just I'm trying to help you guys subscribe to this concept because if you can be patient and have those things ready to go, you'll do just fine. So here's the other thing. I have a buy on the pound dollar. Let's see. Does this one have a break? Yeah, it does. So um this is resistance right here. Very similar to what we were looking at on the Kiwi dollar. Nice resistance level. Okay, what caused it to break? It's whatever. And actually, you could even argue that there's like another resistance right here. And yeah, there's another one right here. Like obviously the market came into this and then just went up from there. It's come into this a couple of times now. And each time it's gone up because whatever this was is what broke that other resistance level. The thing is, I'm most interested in this one. It just seems to be more respected. So that's anyway, I've got a buy right there sitting. I don't know if it'll trigger though at this point. I might just delete it. In fact, I am going to delete it. But that's another trade I took last night. Okay, next trade, pound CAD. Got a lot of pound trades actually set up. This one right here. It's not triggered. I don't know if it will. Probably not at this point, but this is beautiful. Look at this. Here is your kind of resistance area. I would say there. You could also argue that this kind of resistance right here, but this one's already been tapped into, right? Like this was a supply demand zone and the market tapped into it and then just shot up. But this one has never been tapped into. That's why I'm excited about it, is because it's never actually been tapped into. So yeah, I do have a buy sitting right there and a stop loss on the other side of that. But again, I'll leave it open a little longer, but I don't know if the market will come down at this point because it would have to come down quite a ways to get into that one. And you will set up a lot of trades like this that just don't trigger, and that's okay. That's okay. Okay, pound Aussie is another one that I've got. Yeah, so this one broke this resistance and this resist both of them broke right here. So yeah, this definitely is one right here. Right here. Whatever the market did in this consolidation is what caused this outbreak that broke this level and this level, which is really nice. So yeah, if the market came into this, I would definitely be willing to buy. But it's just been on it. It's just been going up without us, and that's fine. There's going to be a lot of trade. You just have to learn to be okay with trades like that. That's going to happen. All right, and then I just have a few other trades I'll show you. I don't know. Let's go like Aussie Frank. I've got some out here. Let's see. I'm looking to sell this one. Oh yeah, so this one, yeah. Nice. We had a nice support level right here, right? Nice little support, and it broke. What caused it to break? It's whatever the market did right here. This consolidation, whatever it was doing, caused it to break. So if this market ever broke, not if it hits support resistance. I'm not going to sell if it hits resistance right here. If it came up and touched this supply zone, then yes, I would sell, right? There's actually a new supply zone forming here. This is technically a little bit of a supply zone right there. You could maybe sell out. I don't know if I will on that one though. I'll look into it, but um yeah, anyway, concepts there though, right? Concepts there. Okay. I think that's probably it in terms of just demonstration on supply demand zones, but I hope that's helpful because that's what I look for, guys. And I look for it on any time frame. I mean, I do prefer the higher the time frame, the better the trade, in my opinion. But you can trade it on any time frame. That's what's so cool about it. I mean, we were doing this on the banker's close trade right here, right? This is a 5 minute chart, and we just identify supply demand zone on a 5 minute, and boom, we've got a trade out of this. Could we have made more money on this? Yeah, like I'm kind of sad that I didn't buy more in this supply zone here, but it happened so quickly. Again, that's another reason why you have to have these limit orders, because if you're not ready for it, it's just going to go without you, right? But nonetheless, still, I'm still happy. Like on my other account here, I have 3 trades that are up $150 each on this euro pound. So that's $450. And then we have I closed out several trades just a second ago earlier when it shot up in our favor. Each one of those I closed. I have a $23 win, a $20 win, $25, $31 win. So yeah, I do have several smaller wins on top of the bigger wins today. So it's really cool, guys. Really cool stuff. I don't know if there's a better way to trade, to be honest, because with this type of trading where you're looking for supply and demand areas, um, you're going to get the best reward to risk ratios. We've already talked about that, but that is what's going to keep you profitable, is having such big wins to the losers that you have. So anyway, we're going to let this guy sit longer, this banker's close trade. I'm not about ready to close it, especially because if it did come back down, it's only just going to come back down into more demand, right? There's just demand down here. So I think it's kind of stuck. Like the market is going to have to make a decision, and I think that decision is going to have to be, um, to go up a little bit more before it comes down. Because again, where do you take profits on this? Well, where's the next demand or supply zone? Like where, obviously we found demand down here. So where would this thing close out next? Honestly, looking at this, what caused this breakout? Really, the next supply zone is kind of right here. Um, that's kind of where the next supply. So that's why I'm feeling like, and in fact, maybe we can bring some of these up just a little bit more, but um, I'm going to close a little before that, honestly, if we can come up into here. Um, but I think the market, obviously, I do think it's starting to come down. I established that earlier today. Like I do think this euro pound is on its way to make lower lows and lower highs. I, I established that earlier. Um, but can it have a move up in the meantime? Sure. And that's what I'm trying to capture on this trade, is a little bit more of a move to the upside. I'm looking to close out most of my trades in here. Once we close out, the market can do what it wants at that point, which I think that's going to be a move to the downside, ultimately. All right, guys. So I'm going to let this banker's close trade sit. You'll get an update with me in a few hours, just, to let you know how many trades have closed out, and like where they closed out, what I've done with the trade, if anything's changed. Um, I'll let you guys know in the Telegram channel. Also, for those of you that watching the recording, hit the subscribe button. Um, Make sure that I've got my free Telegram signals in the description, so you can sign up for those. Obviously, if you want to come to these classes live, you need to sign up for my 14-day free trial, and you can start coming to these live classes to take the trades with me in the live class. So, well, awesome, guys. I appreciate your attendance. We'll have, let's see, tonight's not caught report tonight. We'll do caught report tomorrow night. We'll have our normal bankers close again tomorrow morning, so you guys can come to that. And then again, later today, I will update you on this trade. It looks like it's starting to go back up again, which is awesome. I've got 30 pips, over 30 pips unrealized and 12 pips booked. So far, so good. I think it's going to keep going up here just for a little bit more, and then we'll get out, make our money, have an awesome day. So thanks for coming, guys, and we'll see you tomorrow.